This is a critical inflection point for Bitcoin. It managed to essentially fall down to this $98,000 support level I've had drawn out on this chart for months now. And we didn't quite come down to it, but whatever, we got the bounce. The big question that this now raises is, are we going to see a substantial recovery that, basically takes us up to new all-time highs? Or are we going to see a recovery that kind of captures resistance and turns out to be a massive trap, getting people to go long at the top again before it just rips down again? That's really the big question here. I think, it's clear that we've seen a big washout, and these kind of situations always put us in, two completely different camps now. The first camp is literally obviously people thinking that this is a deviation and, it's back to business as usual, which we've seen that happening so many times inside of this market cycle. And I don't think that we've disqualified that even in this situation here. I really don't think we have, especially with sentiment being in the toilet and how absolutely bearish people are with a reading of 21. I do think that, there's pretty good reason to believe that this could actually lead to a real recovery here. But again, it's all about that resistance. It's all about seeing where the market does end up capturing a little bit of resistance, because if it does start backtesting some of these old levels that used to be support and finding resistance, that's going to be pretty much GG for Bitcoin. F's in the chat with $80,000, $90,000 Bitcoin prices incoming from there. But let's actually go ahead and break down the stock market, because I think this is way more important than what Bitcoin is doing right now. And the stock market had managed to kind of fall down to its previous all-time high, which was one of the kind of more vocal predictions I was making here on this YouTube channel. So huge shout out to those of you that are actually subscribed to the YouTube channel and catching all this content as we put it out. Obviously, we've also got the BroFi pre-launch offer right here in the description for you to check out if you haven't done so already. We'll talk about that a little bit later on here. But for what we've got right now in this market, ladies and gents, the S&P 500 has managed to backtest its previous all-time high, which is really, really nice. And seeing that we have actually managed to find support off this level now is even better. This is a really, really good sign, and it definitely seals that there is good health still. Obviously, I mean, that's not surprising with the S&P 500 right now, so that's good. Now it totally depends on if this lasts, right? I mean, this is a pretty lackluster bounce so far. We could definitely just fall flat through this level, and then we're looking at next speculative levels around kind of low 66s. But I don't really want to see that happen. I'd like to see that we keep this low that we've managed to just punch in over here. We've got Tesla stock jumping up pretty aggressively as well today. I mean, it looks like we are just seeing kind of consolidation now, with prices kind of returning to the kind of lower ends of these ranges just a little bit. But to me, this looks like kind of standard coiling up before a continuation. I mean, here's the NVIDIA chart here. It looks identical to basically any period of time over here, just, a month or two ago. And so to me, this looks like, you get a big rally up, let's say 5 steps forward, you end up taking, 3 to 4 steps back, and then, you carry on higher. That's definitely kind of been the love language of the S&P 500. And so if this, does end up sticking, again, I mean, this is obviously, exactly what resulted in the recovery for Bitcoin, right? I mean, if we go ahead and throw this on the Bitcoin kind of comparison chart here, I mean, literally the same hour that, the S&P started to reverse, Bitcoin also started to reverse. Bitcoin was trending down at the same time. Bitcoin is this blue line here, and the main candles here are the S&P 500. And Bitcoin was trending down at the same time the S&P was trending down, and it reversed at the same time as well. So, as we know very, very well now from watching this channel quite regularly, shout out to those of you that are subscribed, Bitcoin is pretty closely kind of tied to the S&P 500, especially in terms of, just general movements. It doesn't necessarily, set all-time highs and so on when the S&P does, and that's why everyone's upset with Bitcoin, but that's a discussion for a different video. As far as what we've got right now, we're getting a good bounce. We're getting a good recovery, right? I mean, you want to see that you're recovering about as quickly as you're dropping, and I mean, in this case, we're actually going a little bit slower than that, but it's not too slow to the point that it's concerning. So I'm really just looking to see if we can get back into some of these ranges here, 106 to 108, anywhere kind of in this box over here, be a very, very nice place for Bitcoin to get into. And then it's going to be all about, do we just blast through resistance like it's, a hot knife through butter, or does this turn out to be a major zone of resistance for Bitcoin? And as I've been saying, I don't think this is a Bitcoin question. I think this is an S&P question, and I think the S&P is in pretty good posture. We're going to take a look at some of the news headlines in the market as well in just a little bit. I do like to kind of integrate this into the videos a little bit more. Let me know if you like that in the comment section down below the like button of this video here. But really, really nice kind of recovery so far. And if we are able to get up to this 107, kind of 106, 108 area, there's a lot of resistance here. This is a dangerous level for Bitcoin at this stage, especially considering that we have fallen an entire kind of 8% below that level at this stage. That's going to be, quite different. I mean, we've pulled off bigger deviations than this. We've pulled off 17% deviations. You know what I'm saying? So we've pulled off stupidly large deviations with Bitcoin just inside of this market cycle, by the way. I don't mean like some historic shit. I mean, like, this literally happened during this same uptrend that we're in right now, since we set the low at 15K. And, with that in mind, that definitely doesn't kind of rule out that deviation could be possible here. And like I said, we're going to know that if we slice through this area pretty nicely. But all of this shit is bull trap territory as far as I'm concerned, right? I'm telling you that we could have a deviation to the bottom, but the same thing exists if we go up here, right? I mean, if we do see Bitcoin really slice through these levels, get up to a level like 112, whatever, this could definitely be a trap that a lot of people kind of get rushed into almost like sheep before the market does rip down. So the way to protect yourself from that is basically just wait for a back test. And then, if you do manage to produce a back test here, then you're quite likely not in a deviation at that point, right? I mean, you definitely still could be. The markets are so fucking AIDS right now that, it's kind of hard to tell these days. But, I mean, from all kind of conventional measures that at least I could reasonably use in these markets, I do believe that, I mean, if you're able to kind of wait for that back test, if you're able to get that back test, that's going to really kind of push away some of the concerns that, hey, actually, this might be a kind of massive bull trap for, bulls to kind of get trapped into here and play their cards wrong. So that's definitely something that we want to be keeping an eye out for. The problem with this approach is if you are being a little bit more conservative, like I described here, waiting for that back test, maybe going long off here or whatever, you might not get it, right? This move might not happen and it could just keep going up forever. And I guess that's why you don't want to be completely out of your spot positions if something like that does end up happening. But that's kind of upside. That's and that is, like I said, the key drawback of this idea is that instead of this move down, it just goes up forever and you don't really manage to get back in. But of course, that's why you don't want to sell your spot positions if you think that it's going to be difficult to get back in those spot positions. But, I mean, fear can definitely lead people to different places. Now, as far as getting rejected and trending down, we still haven't hit our key area of support on this chart. We outlined this yesterday on live. So again, shout out to those of you that were tuning into that. We got a really, really nice set of beautiful yellow lines right here, and I think that they are very, very telling. They line up very well with our lovely, lovely Fibonacci. And that sits right now in this golden pocket sits right now in between $91,000 and $94,000. So this is still going to be my favorite level for Bitcoin to retrace into. Just this kind of go ahead and put a box right here just to make this extra clear. This is kind of my favorite box for Bitcoin to drop into right now. And if it does happen, I mean, just take a look at all of the support in this range historically. I mean, we initially set all-time highs right here and then got a rejection, but consistent support from there, and consistent resistance and consistent support once more. So this looks overwhelmingly likely to be a really good area of support for Bitcoin, and that's probably going to come into action if we do end up getting that rejection, because it's going to be pretty easy to sweep this low. I think I don't want to say it's going to be pretty easy, but I think this support level was a lot stronger than this support level will be. Do you know what I'm saying? Like, I think that if we broke this support level, we're probably going to break this one too. And so with that in mind, a kind of back test really does line up with putting us right in this range. And that would probably, I mean, if we take a look at Bitcoin dominance, where is Bitcoin dominance right now? It's sitting at 60.5. And this is actually one of the best developments we've got here on the chart, actually, I'd say, because, we have seen a very, very high reading here of 61.3. I mean, this is like getting close to the major liquidation event that we got on 10/10. But what I think is even more telling is the fact that it's now dropping back down already. And so these altcoins are holding really good posture. Here's Ethereum once again, getting a really nice bounce off this level. I mean, it's clear that this is a range that is getting defended by bulls. Now, that doesn't mean it's going to get defended by bulls forever, right? Nothing is perfect, nothing is guaranteed here, but these are really, really good early signs. I mean, the market doesn't really want to spend much time down here. As soon as it gets down in here, there's a lot of buying pressure coming back in. So if we are looking at, a kind of real bottom in this range, then I think we've got the right early warning sign so far. I mean, look, granted, if you're bouncing off this level, you don't really want to return to it super quickly. That wouldn't be good. But as it stands, I don't really have reason to fade this right now. If it does end up failing and we don't end up finding support in this range, then our next range for Ethereum is going to be about 2.5 BTC per token. I would personally love to buy down here. I'd say count yourself very fucking lucky if the market gives that to you again, because, from what I've seen over my 8.5 years of being in the market is not that generous. So if it happens, great. If not, then, this might just be roughly where the lows are punched in over here. Unless, of course, we're going fully macro bear, but then, you probably completely oppose everything I'm saying in this video, so you might not even be watching so far. But here's Solana against Bitcoin. Throw this onto the logarithmic scale, and we are coming pretty close to that support level now, sitting at about 145 BTC per token here. We definitely don't want to see it dropping too much lower than this, because if it does, we are losing a pretty big macro structure here. I do think that with where fear is... Now, like, if we get a capitulation event, it's kind of GG for this shit. It's probably dropping quite hard. Could even fucking halve. But, with that aside, if that's not what we're getting here, then, fear and greed's very low or at support. It is the typical setup for prices to start bouncing quite aggressively. So I definitely would keep that on my radar here. But if we do end up pulling it off, then this is basically breakout territory for the bull flag right now. I don't think that we're going to be able to last in this triangle for much longer. And so if we are able to capture support, that might be one of the last attempts at that support level for some time before potentially a big breakout. Some of the other coins that I like to watch also just kind of hanging on. XRP is doing pretty well, I would say, to be honest. I mean, it's holding up. It's respecting its support levels. Obviously, it does move a little bit on its own. It is kind of independent from the rest of its space to an extent. And so it is very nice to see this kind of unique strength again continuing to play out for the XRP chart right here. And I'm definitely a big fan of that. Gold, very quickly, is still consolidating just under $4,000 here, but it still looks to me like it's going to be breaking down. It's got a... I mean, first of all, it's in a downtrend, and second of all, it's already kind of painted a continuation pattern right here. This was a pretty, sizable kind of... triangle here, and we're again kind of painting something a little bit similar to that right now. So these are going to be your very typical kind of continuation patterns. You trend, and then you trend again, and then potentially trend one more time here. And I'd like to see gold kind of falling down toward this 3,300 level here. I think this would be a really nice level to see gold retrace down into, and it would probably continue to enable the S&P to continue going up. Not that we need gold dropping for that to happen right now. I don't think we do, but I do still think that that's going to be something interesting to look at. Let's go ahead and take a look at Palantir. I'm really interested in Palantir. It's fallen down to a support level right here, so this is going to be, a pretty obvious kind of potential buy. I'm going to go ahead and put an alert down there because that's something I'm personally interested in. And as I've been telling you guys, BroFi, this offer we've just launched here, we are still in pre-launch right now, which means that you're getting the best price it's ever going to be at. It's $100 to join right now, and you're not even paying for renewals because we're in early access, which is really cool. But one of the cool things you're getting here is completely just direct access to me. I'm right there in the group chat with you guys, working on whatever is going on the market, weathering those storms with you, and my proven tools and strategies. But more than that, I'm also breaking down in very large levels of detail, my English is escaping me, what my future trade setups are. We're going to be having discussions about that, in-depth Q&A sessions and so on. We've already done our first weekly show last week. It was amazing. It was an hour long, really informative. Think of it as the kind of live streams that we're used to on this channel already, but instead of just doing analysis, it's primarily just focused on trading. So like actual trading, actual setups, actual investment moves, in detail, exactly what I'm doing here. So the next weekly show goes up tomorrow, so get yourself inside if you are looking forward to that right there. Very cool stuff, and that early access pricing, which is super cool. And the reason I bring that up is because stocks are also a focus inside of that group. It's not just crypto. I'm obviously primarily interested in crypto, but if stocks can make me money, I'm not allergic to money. I quite like making money. So, I'm gonna play around in stocks as well, which is obviously quite exciting as well. But 104,400 right here. We're making our way up quite well. We probably do have some lagging indicators now, weighing Bitcoin down a little bit. Here's the 4-hour EMA ribbon, which we haven't actually hit yet, but it is lining up with resistance in that range right there. The hourly Ichimoku cloud also starting to give us some resistance right here, and on the 4-hour time frame also developing at the 107 range. So there are a lot of indicators that are now kind of starting to stack up against Bitcoin here, which is going to be a potential point of concern, and we're going to kind of continue to watch how that plays out here. But let's bring it over to some of these news articles here. Let's take a look at the markets wrap here from Bloomberg. I don't know how much more I'm going to be using this because I don't think these guys are particularly great, but they do have interesting information sometimes here. Stocks stage rebound as dip buyers wade back in markets wrap. At a time where every dip in the market is perceived as an opportunity, buyers emerged after a brief pullback led by some of the biggest winners of the artificial intelligence boom. Bitcoin rallied and stocks and bonds fell. I mean, this is what I'm saying. These guys are clueless talking about Bitcoin rallying. Equities rebounded with the S&P 500 almost up 1% following a slide that underscored worries about over how stretched the market has become and how sensitive it is to unfavorable news. This is the thing, is that we're now so heavily dependent on AI, the so-called Magnificent Seven, the big kind of 7 tech companies that are kind of leading the S&P 500. And because of that massive dependence, anytime that tech industry gets shaken up a little bit, the entire S&P will get shaken up, right? And that's obviously far from ideal. That's not what you want. And at the same time, I think it's also kind of the only realistic take that makes sense here in this market, because we are in a transitionary phase now where the world is changing right in front of us in a very, very significant way. It was iPhones, it was social media, now it's AI. And with each of these new kind of innovations that really take hold in the world, you do see a complete shift in how markets work and what markets respond to and things like that. And obviously, if these Magnificent Seven companies are carrying really, really hard, you are going to see a lot of volatility when they do get hit. It's actually something we're very familiar with in crypto, because we understand that if Bitcoin gets knocked, then your altcoins are probably going to get knocked pretty hard. It's kind of the same deal here. It's a little bit disconcerting that it's happening on such a massive scale with such massively, with such high company valuations and things like that. But at the end of the day, this is where we are. And, I don't necessarily see this slowing down at all. I think that it's just a lot of weariness, a lot of battle-scarred people that are just very weary, of what we're seeing in this market, very unsure, very uncertain. And so anytime there is a reason to get a little bit fearful, people want to be fearful. The markets look overextended, and I think that's why people are feeling that. But I think that's why people aren't getting that resolution that they're looking for with the S&P 500. It's not happening. The S&P 500 is holding very strong. Even if it pulls back further from right now, it's still going to be an incredibly strong posture. It can dump by 11% down to its previous all-time high from February of this year. And it would still be a very, 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 very healthy S&P 500 chart from these perspectives here. Obviously, yes, it's very, very overextended, but what does overextended mean? This is a measure of innovation. The innovation is not overextended. The innovation, I think, is actually still quite early on in its development journey here. And that's why I think that there's so much more room for the S&P 500. And that's why I think that this kind of, sensitivity that people have to the market is actually largely just down to the fact that, people just don't really, they're not really okay to digest the idea that markets could be in a kind of new paradigm right now where things move a little bit differently to what we're used to. I know that's going to be very hard to digest for a lot of people, especially people who've been, deeply watching these markets going back the last, 15, 20 years. We don't see things like this happening particularly often, but at the same time, we don't get AI booms like this particularly often. So I think that's why we're seeing this in a very, very real way here. For investors with cash on the sidelines, the recent market pullback seems like a good time to buy, especially for investors with a longer time horizon. Earnings are crushing it and growing faster than revenues, and that often leads to multiple expansion. And this is the thing is, there's a lot of people with sideline cash right now, and we kind of read that as bearish headlines, but we're failing to understand that if there's cash on the side, that cash can only click one button, and that button is the green button. That cash can only click the buy button. Okay, when those people have bought the assets, when those people have bought the stocks and whatnot, now they have the ability to push the red button. Now they have the ability to cause or exacerbate a market crash, to make a current, to make an ongoing market crash even worse. But if they only have cash, then they can't do any of that. They can only buy, which only makes the market better. And so with a lot of people sitting in cash on the sidelines, I think that is a pretty good sign. The only kind of bad thing about this is that these people could actually be holding cash because they think a much bigger crash is coming, right? And that's actually the thesis of people like Warren Buffett, Berkshire Hathaway, and so on. And you know what, man? They definitely could be right. I really feel this. I'm looking at things like the housing market right now, and I do not understand how the housing market is going to be able to keep itself propped up with the middle class that owns houses in countries like the United States, like the UK, Europe, whatever, where nobody's going to have a fucking job or income. I don't really know how people are going to be able to keep on paying for their houses unless they've already got literal investments that just allow them to live off their interest. And who's in that position? Very, very few people actually have that luxury. So it does look like we could be looking at a much bigger, disastrous kind of crash at some point, whether that starts now, whether it's already started, or it starts in a couple of years. I don't really know. I think for real estate, honestly, it could have already started. And I think that doesn't even matter for us as crypto traders. I think that's kind of the craziest part, because if we do take a look at where crypto is, I mean, crypto, first of all, has been hanging on quite okay. The stock market, more importantly, has been doing incredibly well. And I think that it doesn't, real estate's been dying all year and last year, you know what I'm saying? So I don't think that we've got necessarily a drawback for stock markets here if real estate does get hit. And I think that's actually arguably kind of one of the crazier things here, because that's just a wild statement to say, to be honest. But, it is what it is. It seems like, if those people with cash are looking for those kind of bigger drops, then yeah, that's going to be, money that only moves into the market when markets are much lower. But that's not how all the money is going to behave, right? I mean, it's a big spectrum. Money moves in different ways from different people for different reasons. And I think that for sure, there is a lot of money that is already entering the markets and that will continue to enter it, as we realize that with this innovation that is not slowing down, with earnings reports that are still looking great, with OpenAI about to go public with their IPO. That's still in about a year, to be fair. That's not super close, but that is still a thing as well. I think with all of those factors, you do definitely have a potentially quite interesting setup here. Let's continue on. So, bond slitters data showed U.S. services activity expanded at the fastest pace in 8 months. Federal Reserve Governor said a report underscoring a rise in employment at companies was a welcome surprise, but reiterated rates needed to be lower. Treasury officials unveiling the plans for financing the U.S. government deficit over the November to January period said they'd begun to preliminarily consider future increases, even as they continue to anticipate no changes to note and bond auction sizes for at least the next several quarters. S&P top 6,800, a gauge of semiconductors, jumped 4%. Apple said to be planning to use 1.2 trillion parameter AI model. I don't even know what that shit means, but I have seen that they are looking to partner with Google Gemini, which is great news. It'd be very nice to get Siri that's not fucking useless. All the Android folk have had this shit for like a couple of years now. It'd be nice if Apple can finally catch up, even if they do have to use Gemini. It's better than using OpenAI. So that's a good start. Concerns about a narrowing cohort of stocks driving equity gains have become louder, while a pivot in Fed commentary has put a dent in optimism over rate cuts. Technical indicators are increasingly flagging reasons for caution, just as Wall Street chief executives warn about frothy valuations. See, if we pump through this, all these concerns are gone. Anyone sidelined and bearish is going to buy, and that pump can get very, very big. We saw this on gold already just, a couple of months ago or whatever. And I think that with the S&P 500, we're headed that way right now as well. Obviously, there could be a massive crash as well. I just think that with sentiment and understanding what's driving the market, I don't think that that's actually what we're seeing here. I think what we do typically see inside of bull markets is that naysayers will, people that kind of fade the trend will actually end up kind of piling on toward the end, and that will provide a huge jump in liquidity because nobody's really selling toward the end. And everybody that was sidelined is now finally buying, and things do just go very, very crazy from that point. Traders looking for fresh reasons to justify the lofty valuations that have carried market this far are not finding too many compelling reasons, but they don't want to sell either. It's an interesting place for sentiment right now, for sure. With dip buying being a major theme in equity markets, the downside has been limited for each pullback, he noted. The recent equity drop looked healthy for a strong rally. Looked healthy after a strong rally, but stocks are still set for a solid year end as easing signals from the Fed, strong AI momentum, and contained geopolitical risk support sentiment. Absolutely agree. I think a lot of these concerning points throughout this year have actually been tied up quite well. now heading into, you know, the kind of second half of this Q4 quarter here. So, I think we're probably going to stop reading this article from here. I think we kind of got some of the key points here. Definitely, you know, looking like, I mean, it's more maintenance, really. The market's just kind of hanging out. And I think that, you know, as long as that keeps on happening, if we are finally done or getting close to done washing crypto out, we could start to see some pretty explosive reactions here for crypto. And I do definitely know from experience that, you know, having pullbacks like this, you know, or perhaps a little bit like this one right here, this is actually very, very typical for Bitcoin before major rallies do start getting kicked off. We've seen this a million times. And obviously this could get a lot worse from here, but I still think that for the most part, we've got a pretty damn good setup on this chart. I don't actually think the damage has been too crazy. I think obviously certain coins, probably coins like WIF or whatever, have been hit incredibly, incredibly hard. Even coins like Cardano have done really badly if you ended up buying this shit a little bit too high, because it's like literally fucking nearly dropped by half now from these highs over here. You know, so you are getting hit pretty hard on certain altcoins, but again, I don't think that was surprising, right? I mean, that's something you kind of have to factor in when you take your positions. You might be upset about it now, but that's still not going to change reality, right? So we just got to keep it grounded. I know it sucks, man. I know, like, I'd love to be a little bit more like, you know, hugging you guys over it and like try and make you guys feel better about it, but realistically, that's not going to work. You know, the only real kind of transformation you can have is when you're ready to finally commit to one. And then you can pull off something very, very cool, and that is exactly what BroFi is all about. If you are ready for that transformation, you are going to turn yourself from whatever kind of trader you are now to someone that can hopefully consistently transform, you know, into a real before and after story. Our approach inside of BroFi is to, first of all, deconstruct how you view the markets completely, and then reconstruct it. That's going to be inside of the BroFi certified course, which we're still releasing content for. That's why we're in early access, and that's why you're getting such a cheap price if you join right now. Then you're going to be able to weather the storms with us, and we've already been doing that inside of the group chat. We got tons of members inside of the chat with incredible profits right now in this market, going short and going long as well. Just lots of action taking place here. So that's how we're going to be weathering the storms together. You'll gain a lot of insights. I'll be right there with you inside of that chat as well. And then hopefully with a little bit of luck, because you do need luck, you will start to see results fast as well. So really, really cool stuff. Check it out with that link in the description. If you have enjoyed this video, make sure you subscribe, like the video, tick the bell so you do get notified of these videos and live streams, and we will see you all in the next one. Cheers.